Hi, and welcome to Sunday Night Charts. We take a look at the charts to help you with the trading week ahead. I'm your host, Steven Van Metre. Moving average colors on your screen: 50 days green, 100 days blue, 200 days tan. Price versus momentum. Price is a general direction. Prices are ahead. Momentum is the rate of change. A bullish indicator for both is positive, and bearish indicator for both is negative. Momentum often, but not always, leads price. Technical analysis attempts to determine where buyers and sellers are at. Resistance is a level buyers can't break, and support is a level sellers can't break, or resistance is where sellers are at, and support is where buyers are at. Technical analysis does not predict prices. It can be used to determine the risk of a trade, help with time and trade, and provide direction in the path of least resistance. Charting offers possibilities, not probabilities, and not certainties. Let's get right into the S&P 500. This is going to be unchanged because the S&P is leading equity prices higher, but it's kind of leading them all by itself. And so let's take a look at what's going on with the S&P, because as far as anyone can tell by looking at the volume here, the volume profile, this is a bullish breakout for the S&P. Now, when we look at the NASDAQ and small caps, Russell 2000, we're not going to see that. But what can you see happened here? It came down, touched the bottom end of this volume profile, rallied up, got rejected, came down, tagged it, found buyers. Again, that's the key. Where are the buyers at? Found buyers. That is support, rocketed through. And as far as we can tell, based on this chart, there's nothing but blue skies ahead for the S&P. No volume slowed down. No sign of sellers. Clear picture there for the S&P being bullish. How about the NASDAQ 100? We see annual momentum is now all bearish, and we're seeing price now confirming short-term bearish picture. This is not a strong view for the NASDAQ 100. Let's take a look at what's going on with it. What's going on with the Qs. And here what we can see is prices have rallied up, ran into resistance, came back down, found some buyers, ran into resistance, came all the way back down to the 50-day, which is usually a bullish indicator, where there was some volume. Still see it got through this little small gap where there's a little less volume than up here, came back down into this zone right at around 324, just a bit above that, found some buyers, but has not been able to find that same thrust, that same momentum the S&P had. And this is troubling for tech stocks. This is not really that bullish at all. Maybe tech stocks run back up and make another attempt at breaking through resistance. Possibly they roll back over and head lower. Nothing really definitive to call here in either term of direction, but momentum absolutely slowing on tech stocks. Let's take a look at small caps. Remember, small caps are important because they lead the large caps, and momentum not quite bearish across the board, but we see ultra short term, intermediate term flip bearish. When you start seeing intermediate term change, there's some problems going on. Doesn't mean the trend can't change back, but it's an early indicator that perhaps what's going on is not all that strong. And here we can see the IWM, Russell 2000, small caps fighting where this 50-day moving average gets under it, gets back over, comes back under, gets over, under, over, and you can see here's that thick band of trading volume over the last 1 year is trying to act as support, but what we're finding out is sellers remain above this band of heavy volume, which is sitting around 221. So sellers clearly above that. The question is the strength of buyers below that strong enough to make the change of direction here? As of now, this has to look like a topping pattern because you can see left shoulder head, right shoulder, no breakthrough. The neckline is all over the place. You can see, but from a bullish perspective, you have higher high, higher low, all the way up. So you see there's definitely buying strength here, but sellers remain very, very strong. Watch the small caps for what could happen to a reversal in the S&P 500. Energy sector remains bullish. As we've talked about on the macro show, the inventory data is bullish as demand is starting to come back. A little bit of change in annual momentum, short-term and intermediate-term change places. Let's see what the chart says. Let's go down and check out crude first, see if we can get any indication what's going on with crude. And crude held its 50-day moving average. Remember, what looked like this was forming a topping pattern, but buyers came in on positive inventory reports, drove prices up, tagged the 50-day, and are up here forming a potential double top. But is that strong enough to say that this rally is over? No, crude can absolutely rally higher. At the moment, just got caught up. We know where the sellers are at. There it's a little over 66 a barrel. What should we see in XLE? double. You see what appears to be a potential double top forming as prices rally straight back up to that. Now, the obvious point here is buyers need to take this up. The next big level for XLE is 55.50. If they can do that, that would signify where resistance is at. Otherwise, potential double top. So this will be interesting to watch as the futures market flows into the cash opening on Monday. How about financial stocks? Super bullish. Man, everybody's bullish on the banks. Banks, as credit continues to contract, everyone thinks that banks are going to make a flood of money, and they're chasing bank stocks higher. Now, what's interesting about bank stocks going higher is, remember, they do tend to trade not directly inverse the bond market. And when we get to the bond market, we continue to see indications of a major bottom, which would be bad news for financial stocks. But for the moment, everybody is in love with the banks. How about utilities? Well, the utilities are back in vogue too. Just ultra short term being bearish, that's not really a big deal. Let's take a look at utilities, because after coming down and hitting support, buyers were just all over this, just plowing in, ramping right through resistance, not just once, not just twice, forming a double top, coming back down, what looks like a bullish flag here. You got the big flagpole running up, bullish flag pulling back down right where support is at 65, a little over 65. Right now, you have to say this is bullish for utilities. What's odd is how it came back down. Just all of a sudden, buyers just raced through here. But so overall bullish picture on utilities. And industrials, this is following the S&P 500. This is purely bullish. If you're in industrials, look at the S&P. The charts look about the same. How about large gold miners? Now, people are getting excited about this because of gold. There's some positive indications in gold. Let's look at the miners. Annual momentum remains bearish across the board. We are seeing some of the longer term. This is a different momentum formula. This is pretty positive. 1, 3, 12-month green. That means it's positive and rising. 6 and 9 months are negative and rising. These are good trends. Is this strong enough to change the picture? Because you'll notice nothing about price and annual momentum changed over last week. Let's look at GDX and see what's going on with it. And it just smashed through, one level of resistance, another level of resistance, pulled back and said, no, I got some more in the tank. Buyers were all over this, right through some heavy zone of trading volume, and got up to this little gap here. You see where in between this really heavy zone down here and this somewhat heavy zone, and little gap ran right into that and found resistance. Couldn't cross through there. Overall, this picture is bullish. From the broader term, not there yet. But the question then is this part of a bigger topping pattern that's still being resolved? Or is this what everyone was saying was just really awkward looking bullish flag from way down at the lows of 16? Party here is not over yet. There's still a chance this could reverse. The bond market is trying to follow higher. Remember, gold mining stocks and bond prices tend to follow each other. A lot of people don't really understand that until there is a reversal, and what you see then is bond prices go up and miners go down. How about emerging markets? This is interesting because the dollar's been weak, but emerging markets haven't caught on fire, and momentum nearly bearish across the board. Ultra short-term price flip bearish. 3-month momentum is negative and falling. Not such a big deal on the 3-month momentum, but if we look at emerging markets, you start to see where this trading volume, we talked about this before, you see this heavy band of sellers or volume at 45. Sellers have been above it. Every time price, bulls have tried to take this higher, they've been met with sellers. Still, this looks toppish until price can break through. And that's what you have to consider is, looking at the 50-day moving average, it's rolling over. It's got a downward slope to it. Price keeps pushing back through it, but sellers keep commanding the market above 54 on emerging market stocks. Has to look bearish until otherwise spoken. How about the high yield bond market? End momentum's bullish. Price just bearish on short and intermediate term. 3-month momentum is negative and falling. Not a big deal on the 3-month momentum by itself. Let's see, high yield bonds. While they've got a lot going for it in terms of momentum and everything else, you can see that prices are going sideways here. Still trading above the 50-day moving average, still trying to ride the 100-day moving average. But as we've looked at this $87 price point, what have we seen? Sellers all above here between 87 and 88. And they seem to still be there. So the question is, where are the bulls that were so eager to buy down here at 86? They just run right out of steam here. And you look at high yield bonds, there is a relationship between them and the broad equity market. So if high yield bonds aren't going to push higher, it puts a headwind on the broad equity market. But so far, S&P not slowing down for anybody. Now, how about the TLT here? Now, I do want to mention on the bottom here, these you're just seeing on the daily basis. So these are not, there's no counts running here over a 5 or 21 day or anything like that. So one of the neat things about this is it's really better in context over a longer period. In this 12-month momentum, which was gold, so it means it was negative and rising, has been flipping back and forth every day this week. Now, this will happen at major bottoms. You don't get a clean signal on this until well after the bottom, but what it'll do is it'll run streaks of gold colored, negative and rising, and it'll flip back a few days, maybe one day, 5 or 6 days, and then it'll go back, and it's all indication of a major bottom. So when you go from all red down here you start seeing some green and some gold colors, there's a change here. Otherwise, not much change on TLT. But what do we see with TLT? Obviously, there's a bottom back set in March. There's virtually no trading volume above 150 because it was all overnight selling. And you look at where the major trading volume is at 139.73, and this is acting as a layer of support. Even though price closed Friday just below that, look at the moving average. It's coming down. It's starting to bottom. If we were to look at the other moving averages, they're starting to provide some upward mobility here. This looks like a bottom. Momentum is suggesting it's a bottom, still working itself out. Be interesting to watch TLT over the next couple of weeks because it's telling financial stocks, hey, financial conditions are about to tighten, and whoever's chasing financial stocks up are going to be on the wrong side of that trade when TLT gets going. How about gold futures? Now, this is interesting. Ultra short term and short term have turned bullish, and momentum on the short terms turned bullish. Intermediate term prices bearish. That's not too great, but look at the longer trend. You got 1 and 12 month positive and rising, 3, 6, 9 negative and rising. So these are good trends. What we're kind of looking at with TLT is turning into, this was all red at one point and now showing some signs of life. But one of the challenges with gold, unlike TLT, remember in CLT you just saw there isn't all this volume here just to slow this down and move higher. But look at what's the problem with gold. It rallied through these zones that I drew, and not valid in terms of where we see all this volume traded at, but looking at what is a larger trading or a larger topping pattern. And the bulls just got crazy here at 1867, right? They drove it through, got to that critical support at around 1750, and then just slammed this boom, boom, right through 1780, right through 1820, and see all this heavy trading volume? Bam, right into resistance. TLT doesn't have that issue. So in order for gold to go higher, it's got to really get all of these sellers who are up here to turn into buyers or be exhausted, whereas TLT just has a little bit to break to go higher. So this is kind of interesting. Wonder if we'll see gold and TLT trade directions where gold starts to fall and TLT starts to rally. How about silver? Price has gone bearish as it has gone higher. We're going to look at that. The price trend has gone bearish and momentum on the intermediate term is bearish. Otherwise, 3, 9 month negative and rising. That's good. Let's take a look at silver because it's in the trading range. You look at, this is just a trading range that starts back here in July of last year and has gone sideways. Remember, and we've got the zones mapped out really strongly here. You can see 24, there's your buyers. They drove it right up into the 27 or 28 range where, as we've seen, where are the sellers? Right there. And you've got this massive amount of trading volume sitting in the low 26 range. So the ball right now is in the court of the sellers. And can they defend here? Or do we finally get the breakout that everyone's been predicting on silver? Kind of interesting to watch. And the dollar is really helping equities here. It's helping equities, helping gold, helping silver, maybe somewhat arguably not helping bonds that much. I think bonds will lead the dollar higher. And we can see price, ultra short-term bearish, long-term flip back to bullish. That's kind of interesting. And momentum on the short-term, ultra short-term is bullish. I don't care about that too much, but here's the danger, right? Look at this, 3, 9, 12 month negative and fallen. That is bad. 1 and 6 month negative and rising. It's these other trends here. We're seeing the dollar go down. What's going on with the dollar? Dollar print says we're still okay. Are we? Well, we broke through the 50-day moving average after attempting to hold that. Couldn't hold the 100-day moving average after getting some move back above it. Couldn't hold support at 90.50, and now tells you the next level of support is going to be somewhere between 89.50 and around 90. So the dollar bears are back. They're in vogue. They're driving equity prices higher, driving precious metals prices higher. Will the dollar hold here? I think it does, but we'll find out probably Monday or Tuesday. Anyways, I'm your host, Steven Van Metre. Thanks for watching. We'll see you on Monday for the macro show. As always, appreciate you being a fan. The content of this video is provides education and information only and not intended to provide investment or advice. Serials not to be construed as recognition or solicitation by selling security, financial instrument, or participate in particular trading strategy. This video was prepared by Steven Van Metre. Personal capacity. Opinions expressed in this video that do not reflect the view of Atlas Financial Advice Inc. or Steven Van Metre Financial.